Let's get rocking here. I'm going to start with our first speaker today, Dr. Willaim Hardin. He has an extensive publication record in the top real estate journals, examples being Real Estate Economics, Journal of Real Estate Finance and Economics, Journal of Real Estate Research, many, many others. He's also the co-editor of Journal of Real Estate Practice and Education and is an elected member of the board of directors of the American Real Estate Society. He serves on the editorial review board of the Appraisal Journal, and 4 of his papers have won Best Manuscript Awards at the annual American Real Estate Society meetings, of which I've never attended. Prior to joining the faculty of FIU, Dr. Hardin held the Robert W. Warren Chair of Real Estate at Mississippi State, where he directed both the real estate and construction management programs and served on the faculty of Morehouse College in Atlanta, Georgia. Welcome, Dr. Willaim Hardin.
All right, thank you. I appreciate the opportunity to be here. Appreciate Paul saying I did all those positive things. That's kind of what I do in my spare time. Most of the time I drive around and look at real estate. My family's been in real estate. My grandfather used to buy land and just try and figure out what it was back before everybody had GIS, back before they could map everything. So, you know, my time in real estate started as a child sitting in the back seat of a car driving around looking at dirt. So I appreciate real estate. I've always enjoyed real estate, and I'm glad to be here with people who have chosen to be in the real estate profession, because it is a profession. So what I'm going to talk about today briefly is about the global market. We were going to do a panel. We changed a little bit. So what I'm going to do is try and look at from an institutional investor standpoint. How do they select, if you're sitting in Dubai, if you're sitting in Europe, if you're sitting somewhere else, how do you decide where to invest? How do you select a country? How do you select a city? How do you go through those broad things? And I'm going to talk about that briefly. I'll talk a little bit about the investment on the residential side, but that's not a high point for anyone in this room, and it's kind of an anomalous investment that leads to more of what we would consider traditional commercial real estate investment, which is buying income-producing properties. Okay, so a couple of us have worked on it, and there are a couple of papers on this topic on what are the conditions necessary, and if I'm looking at a big picture, what do I have to have as a framework to invest in a country? And there are 6 factors that we look at that have been shown to be very important, and there's actually a ranking that a couple of people have come up with. The U.S. tends to be at the top of the ranking. There are other countries in Latin America that tend to be at the bottom of the rankings. And I'm going to go over each one of these 6 components. The first one is economic activity and growth. If you don't have an active, growing economy, real estate does not go up in value. They have to have real estate opportunities, meaning there has to be a market that's tradable, that you can buy and sell real estate. You have to have an entrance strategy and an exit strategy. And if you can't sell, you can't exit. How big is the capital market with regard to real estate? Investor framework and legal protections, regulatory environment, and then what the last one is, a socioeconomic or cultural component to it. So that's kind of the broad picture there. I'm going to talk about each one of these. Okay, so what do we talk about when we talk about real estate activity? We're talking about how does it work? What's the economic base that drives that country or that location? Does that economic base have a tie with the elite? Meaning, is there a business tie-in that someone can have a personal business and another type of business? For example, a residential unit in New York or Miami perhaps is a conduit for a further, but in the end it comes down to without real estate, without real economic activity, there is no value to real estate. Real estate cannot go up by itself. So the first thing we look at is what country or what cities have economic activity. Number 2. What can we buy? What's the depth? What's the availability there? And I'm going to talk about commercial here for a second, and if I sit down here in a minute, I'm going to apologize. I've had a cold all week, and I told Paul, I said, you know, went to bed last night at 7 o'clock. So let's talk about residential, though. We're not really interested in residential in this one, but I consider residential to be almost, in Miami, to be a consumable investment, which is I'm a wealthy individual. I can buy $1 million condominium because I can. And by the way, it's not going to go down to zero. So if I buy my Ferrari, if I don't buy the right one, it goes to zero. My S-Class Mercedes, it goes to zero. My condominium in Miami, hey, it doesn't go to zero, and if worst case scenario, I can sell it and exit that, and I can use it. Okay, so my family can use it, I can use it, I like to use it. So it's not an investment in the traditional sense. It's an investment that's a familial and economic hedge, perhaps, related to what I'm trying to do in a global context if I'm a wealthy individual or elite. On the commercial side, it's a little bit more straightforward, which is where are the opportunities to invest in real estate that generates long-term cash flow and value appreciation? Is it in the United States? Is it in Mexico? Okay. Where can I get information that allows me to make a valid decision? Which is, if I go to country X, there is no real information on market trends. One of the top brokerage firms came into class a couple of months ago, and they talked about their studies when they talk about the real estate market in certain cities in certain countries. And they admitted, well, but in this country, when we talk about real estate in Lima, Peru, we're talking about 2 square miles of commercial real estate in the whole country, because that's where we have data. As an institutional investor, that doesn't make me happy, because what I want to do is have enough information to make a qualified decision and understand my risk and return profile. Okay? So we can sit down there and look at different countries, but it comes down to, as a decision maker, do I have information that allows me to make a decision that I can justify? And that's very important as an institutional investor or anybody giving advice, because if you work for an institutional investor, you work in a corporate structure. No one in a corporate structure wants to raise their hand and say, we're going to take a lot of risk here, and if it goes bad, I'm going to be unemployed. So institutions tend to be conservative. So they tend to have information, which is different from a private investor or a family investor. So it's a little bit different. And then finally, what is the depth and breadth of that market? Which is, can you trade that asset? If you want to sell it, can you sell it? Or do you have to take a discount? You might get a great cash flow return in a tertiary country or city, but when you sell that asset, is there any appreciation potential over that holding period? So you kind of have to look at those and find out how the exit strategy is and whether people have access to that market to buy and sell and trade. Okay. Next idea, capital markets. Where do I get my money? Can I borrow money? Can I get 30-year money? In the United States, we take for granted almost instantaneous access to capital. We can get a 30-year loan if we buy an apartment complex tomorrow. If you go to most other countries in the developing world and in Asia, you're going to get a 3-year and 5-year loan if you can get one. It's probably going to come from a bank. Okay, so you really don't have the capital markets that we have in the United States. So the question is, how can I create that capital stack and how can I allocate risk? And probably one of the biggest hindrances that we have globally in real estate markets is related specifically to a lack of capital markets in the developing world. Many of you are familiar with Latin America. I lived in Brazil for a number of years. When I lived there, inflation was 1,000%. You can't get long-term money when inflation's 1,000%. You can't get long-term money when inflation's at 12% or 14 or 20%. So what we need to see is a capital market that works, and note that the United States, Western Europe, and parts of Asia probably have the most functioning real estate capital markets in the world. Okay, so that augments the opportunity to buy and sell because you don't have to be a cash buyer. You can be a buyer that brings debt and equity into the capital stack. So part of what we want to see in these markets is debt and equity, excuse me, my cold is coming back, acquisitions. Probably the item that is most interest here in Florida and that we see in great detail is the legal investor protection. People invest in Miami, people buy condominiums in Miami because in Miami they have legal rights that are easily that are easily that are enforceable. Being from Miami, we also know that other countries don't have the same transparency and legal structure that we have. It is hard to enforce contracts. It's hard to enforce debt. The judicial system might not be working as well as we have in the U.S. or in Europe or in other countries. So as an institutional investor, I have to be able to know that I can protect my claim on an asset. If I can't protect my claim on an asset, I don't care how good the returns are. It really doesn't matter because it doesn't fit my risk profile. Now, there may be other investors who are more risk tolerant who are interested in that, but typically I want to know what are my legal and investor protections. Is there standard business practice that I can understand and utilize? Can I get title insurance? Does title insurance matter? All those things are important in the broadest context for these institutional investors. A little bit different. Okay, I'm gonna have enough water here, so I'm not gonna die here. But maybe I'll drink some. Maybe that'll be the difference. Well, now I'll tell you, if we ever have a hurricane and you're looking for water, come here because there are like 12 bottles unopened water back here. Okay, so and the other one is, what does government want you to be? Is it pro-business? It's as simple as that. We look at that even in the U.S. if we're going city A versus city B, state A versus state B. Florida wins in many competitions because what? We have no state income tax. We're very business friendly. But that's at city or state level, but at a country level, what's the ease of business? How long does it take to incorporate a limited liability company or a similar corporation in X country? And we all know that in certain countries, something we can do in the U.S. online at zoom.com can take a year. That hampers business. That means that we're not interested in necessarily working in that environment because it's difficult, and I have to be paid a premium for difficult regulatory environment. Lack of corruption. Standard practices applied evenly. We have a lot of flight capital in Miami simply because it comes from countries where people don't think that's the case. They simply want to protect their assets. They like real estate as an asset class. They come to the U.S. because there is a legal framework. And not only is there a legal framework, there are regulatory and governmental environments that protect that framework. And that's essential if you're an international investor. We think primarily coming to Miami, I'm looking at it if you choose to go to any other country. All right. Here's where we like to say we're good. And we are. Because we're good at all these in Miami and in the U.S. And that's the social and cultural components. Stability of government. When I came in today, I turned it on NPR, and they were talking about the death of the king in Thailand. And they were talking about the prince who is going to, in essence, ascend to the throne. And the commentary is, the government's unstable because they don't think he's capable. The military did a coup 2 years ago to stabilize the government because they knew the king was in poor health. Those are the ideas, those are the things we're looking at, which is what is the ease of transition politically? Are there conflicts going on in this country or in a certain country that affect the ability to govern? My first job years ago in banking is I did country risk analysis, and the first thing we looked at had to do with the socio and economic and cultural components to make sure that there was a viable long-term structure in a country, which is what were those political components that could destabilize a country and make all our other analysis moot. And that's what we're talking about here. Wealth and income disparities. openness to cultural change and diversity. One of the greatest things in Miami, in Florida, in the United States, is that we are open culturally. We are open to different languages. We're open to everyone who's available and wants to come here and work hard. And then safety and stability throughout a region. So, I got the boot there, so I need to hurry up. I'm going to talk about where we rank in this, and then talk a little bit about Miami briefly. Okay, so obviously the U.S. ranks very high. No one doing international investment, whether it's a private investor or an institutional investor, does not have the United States on their radar. And why is that? We have a strong economy. We think it could do better, but we have the largest economy. It's growing at 2 or 2.5%. Since we're the largest, that's still substantial. People like to invest in a dollar-denominated asset. The dollar is the functional currency for many institutional investors. By functional currency, that's the currency they keep track in. Okay, so if they invest cross-currency, they ultimately convert it back to a dollar return. Okay, and that's their functional currency, and that's exciting to them. We're in a good position. We are, however, competing with every other country that wants to have real estate investment. Our competitors include Asia, Europe, and even in Latin America now. Many of these institutional investors are looking globally. So where is Miami? And I'm going to say that we rank pretty high, but probably not as high as we would want to be. And I think part of the problem in Miami is we simply don't have the scale of markets that for office and industrial and some of the classes that institutional investors are interested in. We have a great market, but you just can't buy as much in Miami as you can buy in a Chicago or the Inland Empire in California. It's not that it's bad or good. It's a matter of if I'm investing $100 million or $50 million, where can I invest that more quickly? So that's kind of where we are, especially in comparison to other gateway cities. I would say we have 2 or 3 opportunities for us, and that is to recognize that we're a real estate services center. And what I mean by that is we have services with regard to brokerage, maintenance facilities, capital markets operations, all in Miami. And we can be a gateway not only for individual investment in commercial real estate, but for institutional investment in real estate. And finally, I think sometimes forget that we have the opportunity to be, in essence, what might be considered for real estate the reverse gateway, which is the gateway for people who invest in Central America and Latin America and who are not from that region. So they want to have a base of operations to invest in Latin America. Where do they set that up? Where do they get their expertise? I would say part of the future for Miami on commercial real estate is to provide that servicing so that we can actually move forward and people can actually use Miami and the services we have here to manage their investments in Latin America, in Brazil, in Colombia, and anywhere in Latin America, in the Caribbean, and we see that happening today. Because at the end of the day, we want to be tied in with those capital sources and management of those capital sources, because those help us bring business and keep business in Miami. So my time's up. I think at the end, if we have any questions, we'll have some questions at the end from our group, but I'm going to turn it right now back over to Paul.